Chuck Carnevale. I'm the Chuck in the Markets Up Chuck. And today's post was talking about the danger of fear. And I think fear is a real nemesis of, good, sound investors and their ability to make money over time. And certainly in today's environment, we have lots and lots of fear. So I wanted to show you a couple of different aspects of fear. I'm going to start with you looking at a company called Cognizant Technology Solutions. I want you to notice this company it's a major outsourcer, by the way. It's a spinoff from Dun & Bradstreet. I want you to notice the earnings growth of this company has been exceptional, and I also want you to notice how the stock price has correlated to that earnings growth from since 1999 all the way really through March of 2007. And then we had this big drop in price, but yet we had earnings continue to grow. In the worst recession we've ever had, we still had positive earnings. The company has no debt on its balance sheet, and the stock price has fallen dramatically. But I also want you to notice as you look at this picture that you're starting to see a significant recovery. At one point, the price got down to $14 a share. But yet since that time, you see this now rallied to, $25.75 a share. You can see it's clearly moving back, at least, currently to its earnings justified level. So, obviously a drop in price. This stock fell from, around $40 a share when it was in value, $39 a share. It got cut in half, and that's a 50% drop, which obviously would be a very, very scary thing for most investors. Now let me take you back in time and look at the last time we had a recession was 2001. And I want you to notice that at that point, Cognizant was trading at around $4 a share in early 2001, January. The stock fell all the way at one point, during the recessionary years where obviously people were worried. It fell down to $1.86. So to put that in perspective, that's like a $41 stock falling down to 18, which is very, very analogous to what I just showed you, that it's recently fallen from around 40 down to around 14. So, the point is there was a 50% drop here, which obviously was very scary. But as I pointed out earlier, this company has no debt on the balance sheet. It's very strong, and I want you to notice that earnings continue to build. So the next picture I want to show you is look at the opportunity cost that you would have paid if you let fear cause you to sell the stock. And obviously, that's all that was happening here is people were afraid and they were selling Cognizant Technologies. Now, what I've done in this chart, I've just taken the Cognizant Technologies, and I've gone from the 2001 period, which you can see is right here. This is the area that I was showing you on the previous slide, where the stock price fell, dramatically for, got approximately cut in half here. But look what happened. The company's earnings continued to grow. The recession, didn't really affect this company very much. It ended up generating very, very strong earnings growth. And, if you were fearful and sold the company back here, look what it cost you over the next 3 years. The stock rallied all the way over and closed at the end of 2004 at $21 a share. So you could have bought it at $1.86 and saw it go to 21, or even if you paid the roughly $4 a share that it was, when it was trading back here, I can't hit it right here, but about $3.50 to $3.80, I think I showed on the last chart. You could have made money from $3.50 to 21 over the next 3 years because there was really nothing to be fearful. The company's, operating results were very, very strong. So, going back to the current picture, I think we're seeing a very, very similar situation. Now, we have a little more impact. This is a much deeper and stronger recession, but we still have a company that had a great 2008. It's still expected to have a profitable 2009. And one of the things that this company really does, to put it succinctly, is it makes, by outsourcing, it allows companies to free up their capital and be more efficient and actually operate their businesses, cheaper and more effectively. Therefore, its products continue to stay in high demand. Again, there's no debt on the balance sheet. It generates very strong cash flows. You can see that the price is already beginning to move back to a more rational level. So the point is, fear caused by the stock price could keep you out of an opportunity here to make a really good long-term investment, which I think doesn't make any sense. Now, I do want to make one final point. I'm going to use Texas Industries here as an example. Texas Industries is a company whose earnings have fallen dramatically during this recession. And its stock price has obviously fallen from a high of, but even if I put it at fair value, from 51 and got all the way down to 12 and 19. My point is, this is actually something to fear. Because with Texas Industries, you had more than just a price drop. You actually had a deteriorating fundamental here that meant that your business was, creating a lesser valuation that perhaps you had paid for it. Where in Cognizant's case, even if you'd have bought it at a much higher price, I still believe the real value is there. So, don't let fear or unwarranted fear keep you from making good long-term decisions. And I believe today, and I've showed many examples in past blogs, and I'll be showing more in future blogs, there are a lot of really terrific companies out there that are currently on sale. I believe Cognizant Technologies is certainly one of those, and I would hate to see, people, because they're fearful, not make good long-term investment decisions. The recession is real. It's with us. It's caused a great deal of pain and angst, and I'm not discounting any of that. But the bottom line is, as I pointed out in yesterday's blog, and again in other blogs more recently, the recession is going to eventually end. The ingenuity of mankind is going to help us solve these problems. And if you're looking 3 or 4 years down the road, as a long-term investor should be, this is what's happened here is we've got a lot of terrific companies that are weathering the storm that are cheap. I'm not saying buy the ones that are all beat up or going out of business or losing great deals of money. I'm saying buy the separate the wheat from the chaff. Look for the quality companies and make sound decisions, and do it with intellect, not emotion. Don't let fear or greed ever dictate what you should be doing as an investor. This is Chuck Carnevale saying thanks for listening, and talk to you again tomorrow.